Let's get this started, hopefully. So it is it's Saturday, February 1st, 2020. Just wanted to try to make a video here, maybe try to do a live broadcast. And we're going to just talk about a few things from this past week. And if you have any questions, just jumping on. Let's talk about it. So first thing here is we're going to talk about the British pound versus the US dollar. And I mentioned this, I referenced this in the video that I made the other night. And basically what we have here is a triangle that has completed. This is an Elliott wave triangle here. And I'm going to try to label this for you guys. Now a triangle is 5 waves, so this Elliott wave labeling tool only gives you the A, B, and the C. So I'm going to have to label the D here. And let's see if I can find that color. I don't know what color that is. That's fine, we'll just make it that. Yeah, that's it right there. And then we had a wave E. So there's your Elliott wave triangle right there. A, B, C, D, E, now moving back up. Okay, and where's the forecast for this? Well, it's going to be about 490 pips from this low. So the general rule is the entire length of the wave A. So depending where you want to measure it, from this wick or from the body, we'll just be a little bit more conservative, measure it from the body. So from the whole wave A down is about, let's call it 485 pips. So then off this low, which is the end of the wave E, you go up 485. And you're pretty much going to be just a little bit past here. So this is the target for this trade. It's probably back up at these highs. You can see it's got just starting to go now. So this is a 12-hour chart. And if we drop down some time frames here, yeah, we're probably just getting going. I probably would wait for a pullback before I would consider going long if you're not already in it. You go down to some shorter time frames here. Here's the 1 hour. That might be a little too short. I would expect that we'll probably see some kind of a retest of this trend line from the top at some point. So we put it maybe about here, that this will probably go down and retest and then come back up. So I'd wait for some kind of a pullback if you're not already in this. Now this is a demo account for me, but I am in this in my live account too. But I would probably wait and see if we can get a little bit of a pullback, because there's plenty of room here to the upside, right? So there's no need to just rush into this trade and buy it right now, because we still got at least 250 pips to go to the upside here. So if we can get a little bit of a pullback, maybe even back to this trend line, or at least somewhere down here, that could be 60 or 80 pips. That would be a much better fill, and you'd have even more room to the upside, right? So I think that that's one to look at. And let's see, pound Canadian. This is another one I was talking about. Let's see here. Pound Canadian. Again, this setup is looking like an ABC correction on a lower time frame. So here we are on the 4 hour. We had this move up. It's probably a 5-wave trend in here, but this is really what I'm focused on right here. Okay, ABC, and now we move back up, and going out to a little bit longer time frame. I would say the target again is going to be somewhere between here and here, which is at least 180 pips from where it is now. But again, I probably would wait, if you're not already in this, wait for a pullback, because we had a pretty impulsive move all day on Friday. I would expect we'll probably see at some point here a little bit of a correction and back and retracement, and then look to get long. I mean, if you're already in it, obviously hold it, because it's gonna keep going up for sure. Just keep your stop far enough away. I'd probably have you stop, probably no closer to the price than maybe below this low, because if we get a deep correction, we could come back pretty far. So if you're already in it, stay in it. Just protect your stop a little bit. If you're not already in it, I would not get in right now. It's a little bit soon, because price has already moved quite a bit at this point. So and so we want to make sure that we get a good fill, right? So what else?
Moving averages get a bad rap.
So hold on, guys, just checking something here. Yep. So hold on, guys, just checking. Okay. All right, what else we got going here? We had another one with, it was kind of forming. So let's look at the pound versus the Kiwi now. We had the actually, no, I don't want to look at that one. So all the pound pairs guys are all these pound pair guys are moving. So the reason why these are going up, there's basically two reasons why those pound pairs are going up. First of all, if we go back to last week, or this prior week, on Thursday we had the Bank of England come out with its monetary policy report and rate decision and statement, and then there was a Governor Carney, BOE Carney, spoke afterwards. They did not change the rate, guys, so which was as expected. They did not change the rate, but this was really the key right here, were the actual votes by the MPC members. So if you don't know how to read these 027, 036, so the forecast was 036, came out at 027. What that means is there are 9 members on the Bank of England's MPC board. And so the first one is how many wanted to raise rates, 2 are how many wanted to cut rates, and 3, the third number, is how many wanted to leave rates the same. So they were expecting none to want to increase, which is what happened. They were expecting 3 to want to cut rates, which is bearish, and then 6 to leave it the same. They actually came out 027, so this was dovish. More bullish, which is why these are green. And then so that was the first part of it. And then when the statement came out, if you go to the Bank of England's website, which I don't have pulled up here, but if you read the statement, it was considering, all things considered, it was much more positive and upbeat than what the market was expecting. So that really sent the pound rocketing. And then on top of that, of course, we had on Thursday night, New York time, we had they did vote finally, Article 50 to execute Brexit. So now they are officially, Brexit is officially done. However, the work still remains in terms of negotiating trade with the European Union by the end of the year. So that's going to continue, I think, to still potentially weigh on the pound going forward. Everything's looking rosy right now, but if there's signs that they're going to have trouble getting that an equitable trade deal done with the European Union that they've now left by the end of the year, then that's going to cause the pound to come under pressure. But for right now, everything's cool. And then the other reason why we saw some of these pairs move, so this is the pound versus the Aussie. So of course this was driven first by the Bank of England decision I just showed you, but also because the Australian dollar was under a lot of pressure this week. And if you go look at any of the Aussie pairs, you'll see that they're way down. And that was mostly on coronavirus fears. And so the combination, so it's a great pair to trade, and the Kiwi dollar is the same way. because the Kiwi also had this big move up because of again, the pound and coronavirus fears, and so we saw these moves continue, and I think they will continue, and I think the pound will continue to appreciate. We didn't see as good a movement on things like the pound versus the Swiss, because the Swiss also was fairly strong this week, because again, on global fears with coronavirus, that strengthened the pound and the yen. So you can see the pound Swiss, this was the Bank of England decision, but it didn't really go very far. It's just kind of struggling to move, as opposed to this, where you just see it flying, and that's because, like, again, the Swiss franc was also strengthening. So you have two strong currencies, and so price doesn't go anywhere. So, and I think you probably see the same thing on the pound versus the yen. Yeah, so here's the pound versus the yen, same thing, right? It had a little push up, but because the yen was strengthening for on risk off fears, the pound versus the yen was not a good trade to take. But all the other ones were. Pound versus the dollar, this was on dollar weakness. Pound versus the Canadian, again, the Canadian weakened on trade fears, and of course, like I said, the Kiwi and the Aussie. So the yen, pound Swiss were not good trades to take based on this, but everything else was, right? And so if we look at the dollar versus the Swiss, what we had on Wednesday, we had the FOMC come out with their rate decision during the afternoons of the New York session on Wednesday. And we had, as expected, they did not change rates, left it at 1.75%. But the rate statement, again, in the press conference afterwards, especially the statement, they were a little bit more concerned and not quite as upbeat, kind of the opposite of what the Bank of England said. The Fed statement was notably more dovish than the market, I think, was expecting, and so the fact that they didn't cut rates, the market, was pretty neutral on. Because it wasn't expected that they were going to make any change, but the statement wasn't as upbeat as they had thought. And then the other thing is, we saw GDP numbers on Thursday not be all that great. Okay, the advanced GDP was down on the quarter over quarter, and the headline one came in just as expected. So it wasn't bad, but it wasn't enough to offset the negativity here. So we saw the U.S. dollar tank, and so that's why the pound versus the U.S. dollar was strong, was going up, because again, we had weakness, strength in the pound, weakness in the dollar, right? So that's what you want. You want to pair a strong currency against a weak one, and those are the two, I would say, the big news movers for the week. And if you go and look at, so let's look at the Euro Aussie. So the Euro actually benefited. Look at the Euro Aussie. So again, weakness in the Aussie certainly had a lot to do with it. And this was that other triangle I've been following for a long time, and it finally did break out after all this noise. Where I thought it was going, and it pulled back, and then it finally shot up. And it probably will go a little further. We'll probably see this get, maybe another 80 to, could go another 80 to maybe 150 pips to the upside. And, but this is a substantial move here, right? So, but we got another triangle here that finished. It's already up 640 pips since the triangle ended. So again, I'll have to label this with my labeling tool here. So this is the wave D, and then we had the E right here. So here's the E, and down. Okay, so a nice Elliott wave triangle, A, B, C, D, E, and then up. So and this is a daily chart. So like I said, guys, this triangle has been forming for a long time. This started really back on August 26th. So we've been going 4+ months it took us to finish this pattern, right? Went down, and we've just been, going at this ever since. And, I've been following this. I've had these trend lines drawn on here once I realized it was a triangle, and just waiting for it to end. Now, the ideal place to get into this, guys, would have been right here. As soon as you saw it, the wave E hit this lower trend line, you just could have bought it straight out right here, and then you know, just put your stop a little bit away from it in case you had a little liquidity pull to try to knock out the stops. But then, you know, you would have rode this thing all the way, and it's still going. Again, I wouldn't get in right now if you're not already, because, you know, you're trying to jump on a moving freight train. Although I think there's more upside, but I would wait for, you know, a correction on a lower time frame first. And this is not showing any signs right now of stopping, but I'd wait for another little setup like this where you get a little pullback. Let's see, this pullback is about 65 pips. This one over here is about 100. So I mean, I'd wait for a pullback of 50 to 100 pips, and then look to go along again. And you know, that's where this is going. And like I said, guys, this is being driven mostly by by Aussie weakness. But the euro had a little bit of strength this week too. We had some positive Spanish GDP and flash CPI. You know, at least came out as expected or a little bit better on Friday. And what else do we have? That was about it for euro. Started off kind of weak. The IFO business climate on Sunday wasn't very good. So it was kind of a mixed bag. But I think the euro is benefiting by just weakness in these other currencies. Because if we look at like the euro yen, you see the euro yen going down because, again, we have yen strength on the risk off because of the coronavirus and global fear. So we saw the euro yen actually go down. So what that tells you guys is that this is being driven, these moves are being driven by the currency it's paired with and not by the euro. Okay, because the euro yen is down, way down. The euro Aussie is way up. The euro Canadian's way up on CAD weakness. So and I'd watch this. I would watch this euro yen, because if this continues, this could be potentially a nice area to short the euro yen, because this is one of those double zigzags I had labeled before in ABC, right? ABC, that's one. Then an X wave, which is a connecting wave between this ABC and this ABC. So ABC, X, ABC, and then down. And of course you could have shorted it right here, but if you're going to be more conservative, you wait till it breaks this trend line and retest. And you can see we're kind of consolidating right now. You can see on a low, shorter time frame, this is the 6-hour chart, 4-hour chart, you can see it consolidating. So, you know, if you want to be conservative, you can wait for it to come down and maybe take out this low. Although this could be, you know, one more push down, then we could get a bigger correction back up. Because this could be like, from a labeling standpoint, you know, this could be what we're in now, right? 1, 2, 3, ABC, you know, flat correction for 4 and then down for 5. So, you know, I'd probably wait this one out a little bit, again, if you're not already in it. If you waited for it to break out here, you know, in hindsight, this wave 1 is about 100 pips. So again, wave 1 and wave 5 are usually about the same length. It's not a rule, but so if you waited for this to break out, you'd already be 65 pips in. So it probably will go a little further. But so if you wanted to be really aggressive, you could actually go short now, and I would just put your stop probably above this trend line, maybe up here somewhere, and you know, you could probably squeeze 70 or 80 pips out of this maybe. But I would suspect we're still going to get a bigger correction back up, and then it'll go. But again, on the daily chart, it looks like, you know, we did break this trend line. This is a double zigzag following a big downtrend. This is a corrective pattern, and it probably will continue to the downside. And regardless where you get in up here, even if it just goes back to these previous lows, that's 450 pips, right? So that's for the euro yen double zigzag. Euro Canadian's been really sloppy and messy, but it broke out on this on the Canadian being weak. But I didn't trade that because it's just been really messy. You can see this ABC completed on the euro yen. Again, this is euro kiwi, and again, this is based on weakness in the kiwi. So that is broken out. And this will probably keep going. This is probably a 1-2. I have it as an ABC, but actually it's probably this is probably a 1-2. We're in 3 now. Again, much like these other ones, if you're not already in it, I wouldn't take it right now. I'd wait for a nice correction. The Euro Kiwi can have some pretty deep corrections. I'd wait for, probably again a 50 to 100 pip correction and then look to go long. But certainly I think it's got more upside potential, at least back up to these highs up here. So look for Euro Kiwi longs on pullbacks. Not right now. If you're in it, hold it. Definitely hold it. I would not be selling it. Move up your stop to break even if you haven't already, if it's not too close. But I'd be comfortable probably keeping my stop somewhere around this 200 EMA, somewhere around here, and just let this thing run. So what else? Euro dollar strengthening on weakness in the dollar, and this one actually could be pretty interesting because this to me looks like let's go out a little bit longer here. This looks like an ABC, right? We got an ABC, right? ABC correction, and now we're going up. So if that's the case, and this thing's going to really keep going, I mean, we'll take out this high up here easily. So you can see we went right to the 200 EMA on the 12-hour chart and then stopped. Of course, it's the end of the week, so we'll probably normal to hit a little resistance at these levels, and probably we'll see a little pullback. But I'd continue to look for the for long positions on the euro dollar. And again, looking at these Aussie pairs, here's the Aussie yen. This is another one of these double zigzag. It looks just like the euro yen, Canadian yen, Kiwi yen. I think they all have a very similar pattern. And you see, an ABC. This is one zigzag, right? Then we had an X wave down. Okay, probably a little ABC here. This X wave that connects two zigzags, and then an ABC up, and now we've clearly broken through, and this is going to keep going. Again, same story. This is the daily chart. I certainly would not go short right now. We're very aggressively to the downside on Friday. I'd wait for a pullback. We probably will get more pullbacks like these. Let's measure a couple of these. 70 pips on that pullback. So I mean, pretty substantial pips. You don't want to be selling at the bottom. 63 pips here. So again, I'd wait for at least a 50 pip pullback, and then look to go short again, get a better fill. Okay. Aussie Canadians probably. That's actually pretty aggressive to the downside, considering that the Canadian is weak too. Aussie dollar. So you can see, these are really getting hit, and of course the Aussie Swiss, also a safe haven currency, much like the Aussie yen. We kind of had a similar pattern here, and you can see this is actually just blew out, took out this low down here entirely. So we have to zoom out a little bit here. This could just keep going. This is a weekly chart. I mean, there's a lot of room to fall here, quite honestly. I'll let that load. And then if we look at Kiwi pairs, they're going to look very similar, right? Going to much like the Aussie. So now I had this labeled as a 1, 2, 3, 4, 5, but either way, this is. I'm going to just take this template off. If you go out to a weekly chart, again, we're seeing pretty substantial move back to the downside. So again, this moved up, looked like a 1, 2, 3, 4, 5, but by the looks of this now, this is really just going down. And again, this is all based on strength in the yen, risk off sentiment on the yen, right? So Kiwi Canadian. Oh, here's the expanding triangle. I was trying to look for this. So you remember when I was showing you the pound pairs? Well, actually, yeah, it doesn't matter. Pound dollar, right? For instance, right? Let's zoom out, right? Contracting triangle. This is what we saw on the pound US dollar and on the euro versus the Aussie. I showed you this earlier. Okay. Right. Contracting triangles, right? With the trend lines converging on each other, right? The upper one down, the lower one up. Well, on this pair, where is it? Okay, this is an expanding triangle. Now it works the same way, right? Works the same way. you still have 5 waves, but instead of the lines converging, they're diverging. So you see the upper line going up and the lower line going down. This is an expanding triangle, much less common, but it works the same way as the contracting triangle, except it's the other way, right? So here was the end of it, and I'm looking at this as, originally I labeled this whole thing as, this was an uptrend, so I was looking at this as an A, B, C. So the triangle is the wave B, and now it's going down for C. But I wouldn't be surprised if it just keeps going now. But potentially, this could be losing some momentum here, but we'll see. But this is an expanding triangle, okay? But it's still 5 waves inside of here. If we count backwards, this is the E, this is the D, this is probably the C, this is the B, and then somewhere in here is the A. So A, B, C, D, E, and then down. It's a little sloppy in here, but still it's an expanding triangle, and we see it going down. Okay, so, and again, this is a 6-hour chart, so I was following this one too, and this is where I expected it to start going down. It did. So you could have gone short right here really easily. It's a low risk trade. Once you count that 5th move, which is the wave E ending, you just put a sell order in right there, put your stop a little bit out of the way up here just to clear any liquidity spikes, and then just let that sucker run. And so in this case, because the wave A is really short, the projection would be the length of the wave D, which is like 90 pips. Now we've already gone obviously well beyond that. We're at 146 right now, so this could just keep going, and again, Kiwi Swiss, again, risk off sentiment from the Swiss strengthening and the yen strengthening on the coronavirus fears, etc. Okay, so that's we're approaching lows here. So again, this is one if you're not already in it, I certainly would not take it short right now. Wait for a pullback and see what it does. But we are approaching these lows here, so I'm sure we're going to run into support at these levels either way. But it looks like it's probably in a wave 3, so it is going to keep going. But again, I'd wait for a pullback at least like this before you go short. But I think you can be pretty confident it's going to keep going down at least for a while. But again, don't try to catch a falling knife or jump on a moving freight train or whatever analogy you want to use. Let the market, pull back and correct, and then look to, jump back on the trend at that point. Don't be looking to go short when you see all these candles, because you got FOMO and you're like, oh God, I got to take advantage of this, because the second you jump in short right here, it's going to pull back on you. It's just guaranteed, right? So don't get into a bunch of drawdown. You don't need to. So that's the way things look currently in the charts. Just look ahead to next week in the mark, on the economic calendar. We got quite a bit coming this week, starting on Monday night during the Monday during the mid-morning New York session. We have ISM manufacturing PMI. If this comes out worse than expected, they are expecting it to improve. If this comes out worse than expected, that will keep the dollar to continue to be under pressure. Even if it comes out at as expected, I would think that it still will be negative, because you can see here 50 indicates expansion, below indicates contraction. So even if it comes out at 48.5 or 49, it's probably still going to be considered weak for the dollar, even if so unless this gets back above 50, I would expect that to continue to pressure the dollar. So watch that. Aussie cash rate during the Asian session, definitely worth watching. I would definitely read up on that. Again, they're not expected to change the rate, but it's just a matter of what they say in their statement. And then right at the beginning of the Asian session on Tuesday, we've got Kiwi employment numbers. So that'll be important. Although, again, for both the Aussie and the Kiwi, if the coronavirus stuff continues to weigh on the market, then things like this may only have temporary. Maybe these are the corrections you look for. This comes out positive, market goes up, and then you look to sell it, right? So we'll see. It can be hard to plan those risk trades, though. But anyways, yeah. So that's that. And then we've got ECB President Lagarde speaking during the mid-London session on Wednesday. Doesn't say what she's going to be talking about, but always worth watching central bank people speak, and that's she's the chief of the ECB. And then we've got more U.S. data, ISM non-manufacturing PMI. Again, that can continue to support the trends on the dollar. Aussie retail sales Wednesday night. That's, again, normally is important in trade balance, so certainly worth keeping an eye on. Lagarde speaking again on Thursday. The economy. Okay, so this one actually could be important. She's due to testify about the economy and monetary policy before the European Parliament Economic and Monetary Affairs Committee. So this one for sure I would keep an eye on in terms of direction with the pound. Then we've got Aussie monetary policy statement. So that always follows their cash rate decision a couple of days later. So Governor Lowe will be speaking, and they'll put out their actual statement. Kiwi inflation expectations also coming out on Thursday. So, and then of course Friday, the double whammy of non-farm payroll and Canadian employment on Friday morning at the beginning of the New York session. So, a really packed economic calendar next week. And guys, like I said, you don't need to be experts on all this stuff, but just be aware of what's coming out. And maybe go to a site like, Forex Live. If you guys don't use there's pay sites you can use, but this is Forex Live. This is probably one of the better free sites, and you're going to be able to read previews about a lot of these events. So you just go on there. They're quick reads usually. You don't have to read everything they post here, but the day or so or the day of when these economic events are scheduled. You go to a site like Forex Live and just take 5 minutes and just read what the expectation is. It doesn't mean you got to be an expert on it, but it'll just give you an idea of where the price might go and what the market's expecting. Because if the market's expecting one thing and the opposite happens, that's when you get good price moves. Because a lot of this stuff gets priced in. So it's just good to follow the analysis. And like I said, there are plenty of sites you can go and pay for this stuff, but you don't need to. Forex Live is a good one. The other one I like to use that's free is Financial Juice. And Financial Juice is an aggregator site, so they take stories from Forex Live, FX Street, and their own stuff, and they just post it. So here's this headline. If you're wondering about Zero Hedge on Twitter, but this is Forex Live. So they're just taking this right off Forex Live. So if you click this, it's going to bring you right to the Forex Live site, which I was just on. Okay, and you'll see this. And it's not loading, but it's there. Yeah, so there it is. So you're on Financial Juice. Here's this title. So that's what I mean. It's an aggregator site, and here it is. So anything that's on here on Financial Juice, for most of the stuff here is just links out to other sites. So this is like a one-stop shop. So you catch not only Forex Live but other sites, and you just have to create an account. It's free, and then you just go in and set into your settings. And news settings, and you just pick Forex, and it's going to just filter out, because otherwise you're going to get all kinds of stock stuff, unless you trade that stuff. But you just go into your news settings, and you just set everything to Forex, and that's what I do, right? So FX, okay, Forex Live, Federal Reserve, and you just go in there and set it to whatever you want. These are all the publications you can pick from, right? And I follow Donald Trump's Twitter because, a lot of times stuff that he says, or you can just go right here and click Forex, and it'll pre-select stuff for you, or you can customize it. So it's a free site, but you do have to create an account, and then you'll get all these alerts. And they do have a live squawk too, which is pretty nice. So you can launch this. It only runs 8 to 4 New York time. And it's a live squawk, so they'll squawk out the news, any headlines that come out. If you're in front of your computer, put the speaker on, you can listen in. So that's, considering it's free, it's not bad, because most of the time you got to pay for squawks. So it only, like I said, it only runs during the New York session. It is delayed a little bit, a few seconds, but it's actually pretty good. So because I have a paid service, I put it next to it, and it's really very close. So anyways, Financial Juice is another good free site as an aggregator site. You just got to set it up. So all right, so yeah, that's about it. So hope it was helpful, guys, and if anybody wants to continue to have these, just leave a comment, and continue to have these events and just kind of talk about where things are at in the market, and we'll go from there. So all right, guys, so that's it. Guys, have a good one, and I'll talk to everybody soon, and hope it was helpful. All right, guys, have a good rest of your day. We'll talk to everyone soon.